Hey everyone, in this video I'm going to bring you one growth stock that's down 77% off the high that I think you can buy hand over fist in 2024. Now, to highlight the reasons why I'm recommending this growth stock, we're going to look at the company's financial metrics, its balance sheet position, and its recent developments to explain and justify why I think this is an excellent growth stock to buy. So let's take a look.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so the growth stock I'm recommending is Upwork. Upwork is down 76.85% off the high, and I think it's an excellent investment. So let's take a look at all the reasons why I like this stock. So starting with the company's take rate. So before I get into its take rate, I want to highlight one of the characteristics I like about the business model, and that is that it's a platform. It brings together individuals that are looking to sell their services with entrepreneurs and businesses and enterprises that are looking to purchase services. So, in other words, it's a platform. It just brings people together and it takes a fee for every transaction that happens on the platform. I like that business model. It's not that much different than an Airbnb, which does the same thing, but it brings together travelers with hosts. It's not that much different than eBay, that does the same thing, that brings together buyers and sellers of things. And so that's a business model that's proven to be lucrative and profitable when you reach a certain scale. And so for that reason, I like this business model that Upwork is employing. So let's take a look at that take rate, the percentage it keeps for itself. So the total take rate in the third quarter was 17.1%, and that was up from 16.3% in the previous quarter and 15.4% from the third quarter of 2022. So you can see that take rate is moving nicely higher from 14% in the fourth quarter of 2021 all the way up to 17.1%. And in my opinion, there is a long runway to continue increasing this take rate. And one of the reasons why I think that is because one of its main rivals, Fiverr, has a significantly higher take rate. Let me show you that. So in its most recent quarter, Fiverr's take rate for the period that ended September 30th was 31.3%, and that was up from 30% in its prior year third quarter. So Fiverr has a significantly higher take rate at 31.3%, and that take rate is rising, which suggests to me that Upwork has a lot of room to go in terms of increasing this take rate because the marketplace is rising in terms of that take rate. And that's the trend I see across all platforms, whether it be Fiverr, Upwork, eBay, Etsy, Uber, DoorDash, all of these platform businesses that are bringing together two sides and taking a transaction fee have all been increasing that transaction fee that they're taking. So it's an industry wide phenomenon that they're all raising these fees. And that's good news for investors because that leaves these participants fewer options on where they can turn to. They can't say, well, Upwork, we're angry with you for raising our take rate. We're going to go to some other platform like Fiverr. Well, Fiverr is increasing the take rate too. And so you can't, there isn't anywhere to turn to when you get upset about an increase in price. That's usually good thing. That's usually a good sign for investors. That means the industry competitive environment is favorable for investors, which is another characteristic I look for when I'm looking at an investment. I'm looking at how competitive the industry is. Are they fiercely competing against each other, cutting prices, trying to take market share at the expense of profits? Or are they all raising prices, trying to increase profitability with less focus on market share? The latter is the more attractive version you want to invest in, and that's the version I look for. And that's one of the reasons why I'm recommending Upwork stock as an excellent growth stock to buy. Let's look deeper. So over the last few years, Upwork has increased its revenue from 250 million up to 666.64 million, and that industry tailwind will support Upwork's revenue growth further. It's easier and more convenient for businesses to hire on Upwork, to hire for services rather than to hire someone full time in person, and it's more easier to hire on board, and it's more easier to let go and cancel service to cut costs when you need to trim down your business. And so for those reasons, I suspect that Upwork will continue to gain traction, and you've already seen that with the business. Upwork's active clients increased by 2% year over year to reach 836,000. And that's been moving upwards since the third quarter of 2021, growing from 752,000 all the way to 836,000 active clients, as it's becoming more and more important for businesses to be flexible, to be nimble, to be adjustable, to be able to respond to changing market conditions. If you have contractors, you can bring them on board and you can let go, you can trim down, you can increase, and you can change the size of your business more effectively and quicker with less cost than if you had full-time employees. You've seen all of these announcements of big companies like Xerox most recently made an announcement, Amazon, Alphabet, Facebook, all of these companies that had to let go of thousands of employees. They've all undertaken billions of dollars in severance expense, in restructuring charges, because it costs money to restructure your business, to let go of that many employees. You got to pay them severance costs. Maybe you offer them healthcare for a few more months. You've got to decide who you're going to let go of. That takes time and energy and effort and expense to consider who it is specifically that you're going to let go. And with contracting services, it makes it more effective. Your business is more responsive to changing market conditions. And that's one of the reasons why I expect it will continue to attract clients longer term. Additionally, Upwork has made changes to its cost structure, reducing expense, and now it's in the right direction after years of moving in the wrong direction. You can see its operating profit margin was headed in the wrong direction, but it's clear now that it's turned things around. I often say on my channel, I don't recommend stocks when they're right here, right? I typically don't do that when they're like only one quarter removed from moving in the wrong direction, like they turned it around in one quarter, right? I typically wait to see further proof that they've actually turned it around. And now it's clear, right? You can see the uptrend. This is 1, 2, 3, 4 quarters at least, and significant improvement upward. And you can see that Upwork has definitely turned it around and moving in the right direction in profitability. Similar story with cash flow from operations in the trailing 12 months. You can see it moving upward, and now it's in the positive territory. And for several quarters now, for the most part, it's been positive in cash flow from operations in a trailing 12-month period. In its most recent trailing 12-month period, it hit its highest mark ever at 41 million. You can feel comfortable now that the business is self-sustaining, does not need to go back to investors and ask for more capital, especially because it's a capital light business model. It's an asset light business model, which is one of the reasons why I like that asset light business model. It doesn't need to spend billions of dollars or hundreds of millions of dollars building infrastructure, building office buildings, building logistics, or whatever it might be. It doesn't need to do that. It just invests in that platform, in the website, in the functionality of it, and that's what it does. That's it. And then it just needs to make sure it's serving customers properly to keep them engaged, to keep them on the platform. And the balance sheet is relatively solid with 555 million in cash and short-term investments, with 355 million in long-term debt. So plenty of additional cash in excess of long-term debt. And finally, the stock is relatively cheap, trading at a forward price to earnings of 15.54. This is just about the cheapest you've been able to buy Upwork stock, which is surprising to me because this is just about the best situation that Upwork has been in, given the consistency in improving its operating profitability, in improving its profit margin, its take rate, its cash flow from operations, in the industry characteristics with fears of a recession decreasing. I haven't seen Upwork in a better position in arguably in its history since becoming a publicly traded company and since I've been following Upwork stock. So for all of those reasons, I think Upwork is an excellent growth stock to buy right now. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.